How was your week, Pete?
It was good. I was the upside stuff I was looking at got a little sketchy, and so I pretty much focused on downside for coin and Tesla, and that worked really well. So yeah, pretty happy about that.
The bias did me well early in the week. Was pretty adamant about a sideways week. I think it was more of a down week than a sideways week, though, to be honest. But it was definitely the kind of game I envisioned. When you go to a fight, sometimes it's a knockout, sometimes it's a points fight, and it was definitely a points fight last week. Just methodical, slow throughout the week. But I referred to socials early in the week, and I did okay there. Um, but never really had the really good day or had a good play that panned out. You always that one step forward, two steps back kind of trading. I kind of was in that last week. So, but we
Yeah,
survived. We survived. If I would have went in as a bull or a bear, I guess it would have just been a bull because that's my one direction. I would have probably got creamed last week. Um, so it's good again to have a plan and always have an outlet of stuff to trade. Like you're a good example of that too. When your weekend work doesn't work, you just go to Coin or Oxy, right? Is that in that
yeah,
kind of
yep,
or QQQ? Um, that's the same
yeah,
thing.
yeah. Pretty much just waiting for some setups to take shape.
Yeah.
It's basically that when if those Friday setups that I found don't really materialize, I kind of just wait and see for something new to set up.
Yeah, no, and that's why I guess I could probably do a whole video on it, but that's why I pay attention to Twitter, Discord, stock twits, and the socials, right? Those like the social plays in general, because if the market's good, they'll push real plays. They'll push real
Yeah,
news for multiple days. When the market's bad, like Friday, we can go look at some of the things they were pushing Fridays. There was one that went 25 to like $60 on 40,000 share candles and then
yeah,
15-minute halt. 40,000, 30,000 shares, 15-minute halt. And it was just like our 5-minute halt. It was just the most stupidest. Like if you buy that and you're not already in, you're probably not going to be able to sell it, and you're probably going to be at a loss. But when the
yeah,
plays get that bad, when they go from the spectrum of pushing news plays to pushing literally liquidity, you can kind of tell what's in the market. And it started off real good. We got the energy plays at the beginning of the week, and then it just um, went real sour over there. So um, yeah, I just didn't see the news pumps I like to see last week, to be honest. Interest.
yeah. And one thing that kind of shook things up was so you had the PPI come out, and instead of C, it's
Yeah,
basically another indicator,
yeah,
and it basically like the market shot up on it and then faded. What I posted that pre-market that morning, I was like, this is a good time for SQQQ because it just tanked pre-market and pretty safe entries under 42 on that, and so for all this just uncertainty and sideways and whatever, like if you got in the low 40s there, it ended up getting into the high 40s later in the week, and really kind of a stress-free way to trade this sort of choppiness is just to get shares in that, because even if so like you buy it at 42 and you're wrong, you I given the environment you can just hold on to those for a while and you'll be fine, um, because of what's going on. It's unlikely that the market's gonna hit the bottom right then, and you're screwed on those shares. So that was a little way to navigate this kind of situation. Just the overreaction to the upside pre-market that we had to PPI, because it's not as strong of a, you weren't going to get a melt up day from that given what
sure.
happened last week basically.
Yeah, you just don't have the volume in the market, really, in most cases, to be honest with
Yeah,
you.
yeah,
Just not enough gas. PPI is producer prices, and then CPI is consumer. So it's what the
right,
people that
yeah,
that, that make make the products pay and what we pay. So yeah, that number going down would be great in general. I just think the Feds were talking a little too much last week too.
Oh yeah, for sure. Yeah, they're not really wanting the market to just take off right now. Pretty obvious.
Yeah, I would say when they see a Green Day, they make a statement. I mean,
Yeah,
I don't know what I don't know if they have the hot list or what list they have, but when they see a Green Days, they're like, "Wait a minute, we can't have this." Because our flux,
yeah.
I mean, I've always said kind of count. I mean, if you got a calendar on the wall, um, just put a little green mark on it, in the corner. Was the market green or red? In the indices. Just go to the overall market, and you'll see trends form. You'll see like three bad, or three good, one bad. Three or four good, one bad, and that's a good market, and that's what you kind of look for. But right now, that there is no trend. It's literally, I guess, the sideways. Just a two good green days, four red bad days, a green day, a red day, a red day, a green day.
Yeah, and even so like intraday, yeah, you'll see this where often you're getting a decent little flush at open, um, especially if it
Yeah,
opens if the pre-market's green, it'll flush down. But if it doesn't really take out the close from the previous day, you're going to see that some of that buying come back, and a lot of it's just mechanical buying, the algos or
yeah,
whatever.
yeah,
But and that when that happens in that first 15-30 minutes, it's kind of like, okay, this is the kind of day we're going to have where you know you can get into something, you can play this pretty tight range, but you're not going to make a massive home run on options, and you need to just be really careful about taking profits pretty quickly. It's a little different to trade shares if you're accumulating at a level and trust and all that. But yeah, in the option day trading, you have to be pretty quick because it'll just bounce back and forth, whipsaw all day.
yeah. The secondary bounces on in general have been better because you get some confirmation usually, even on the share side. The open's been real tricky. Um, you almost have to have a historical level and a pre-market level to really enter confidently, unless you're in an uptrend.
Yeah, yeah.
But that's yeah. Um, what topics you got this week? Let's pivot a little bit. Um,
Okay.
you got anything?
So
I know we're on a short week, so we're gonna be a little short this week on stuff.
yeah,
But
I've
what do you
just
got?
oil, banks, and crypto.
Okay, let's start with
Like
oil because that's 70 something a barrel again.
yeah, and a big there's a divergence between where the stocks are priced and where oil is priced right now. Where the stocks are still trading much higher. Where Oxy was kind of trying to sell off on Friday, but once again, it just my line 69.56 probably honestly like the actual like 69 even has been sort of where it bounces, and until it breaks below 68 and stays there, it's likely to keep going up. So what I'm saying is, if your mega caps like Oxy and Zom are still trading so high, and then the small caps that I'm going to get into in our other section, they're still holding their uptrend. That divergence has to resolve itself. So I think it's probable to me that it's actually going to resolve itself to the upside, and that oil prices futures, are going to bounce, and it's going to kind of be pulled back up to XLE rather than the other way around.
Yeah, I don't think oil can stay in the 70s too long in general.
Yeah,
Not in this
yeah. I
environment.
think 82 to 85 probably where it's going to bounce back
Yeah,
to.
yeah, with it. Yeah, that's just more bigger picture. I think I don't know why it's going down right now, but I don't think it's going to stay down there. I don't think we're getting to the 72 number either that the government said they'll rebuy at, which that
Right.
would be your
Yeah.
floor. That would just have to be your floor. It's a big order. They got a big order to fill there.
Yeah. There was some OPEC news but I don't think it was anything major. Just kind of a little shock to the market, maybe. But
what's your because I really think we should just get that out there since we like to be early on stuff. What is your price point on barrel of oil where it helps inflation overall because it's going to help everything from shipping to production to you buying it to get into the store to buy it. At what point do you see oil a barrel? What cost at that kind of pivots as not as far as actually doing it, but just in people's head.
um, anywhere from like I kind of think it's got to get under 70 for that.
Okay. Okay.
Yeah, I think otherwise it'll in the 70s and like the low 70s. I think um, you get some relief, but yeah, I'm looking for it um, to actually impact things. I think it's got to get into the 60s,
Yeah. I'm
like 65 to 68, something
Oh
like that.
wow. Okay. Yeah. I'm anything under that 72.
Yeah,
That's just kind of how I see it. I just want people to kind of have an outlook on that because I think that's a big. I guess I talk about the three catalysts now that they're down to two because we had the political one. It wasn't that great. Um, the oil's on the table now, getting back under control is a major catalyst. If that gets figured out, that'll kind of help everything, in my
I
opinion.
mean, so like yeah, pre-COVID, and oil was in really bad shape back then. But pre-COVID, you had this range for like a long time, like years, where it was in like the 40s to like 75, 76 was like the top end. And in summer of 2021, when it hit that 75, dip briefly, and I'm looking at the weekly, and then and then shot right back up. Like all of that whole uptrend, I really wasn't at that time following oil prices. My entry into oil was actually just the stock Oxy,
Yeah.
just following options on it. But when I saw it was trading in the 20s, and I saw leaps to the 60s, I was like, okay, there might be something to this, and it coincided with this whole crazy move here. So I'm bringing it up to say I don't think we're really likely to see oil go back into the 40s or anything like that. But I think we would need a new channel of the 60s to the 80s and some stability for it to stay in there, to give that kind of deflationary pressure you're talking about.
Yeah. I started watching um, the ETF Gush, which is on the screen here, when Biden was elected, and he started talking about we're going to go back to normal on July 4th. I believe that was
Yeah.
that whatever summer that was. That's kind of when I started following oil prices again, like regularly, because I thought there would be a time to profit in there, and it exceeded that by far. Um, but that's what the market does. It kind of overreacts or underreacts to everything. I
Yeah.
just think it's been a long enough process, high and low. At this point in time, we got to level out. um, Not really trying to predict where that is, but um, I think that low 70s is it, and I'm totally with you. I don't think the 60s stay long anymore, um,
Right.
to be honest with you. So yeah, 40 and 50. This sounds like a pipe dream, unless OPEC goes away and we're a free market.
Yeah. Right. And I know I remember thinking back to when like they started sort of the fossil fuel, um, I guess I'll say propaganda when I was a kid, and it was like we're gonna run out of oil, and it was basically like by now we would have run out of oil if you believed what they were saying back then.
Yeah.
But I just there's just so much, and they're getting so good about finding new ways to get at it, and drilling technology and all this. So really a lot of the scarcity is policy driven.
Yeah, yeah,
It's infrastructure. Like don't like you either you're not drilling, or you don't have the infrastructure to do anything with it when you actually get it out of the ground because you let that fall behind. So that we're going to face a decade of issues like that, and that's going to keep the prices up, I think.
the best way to explain like oil or anything, honestly anything at this point in time, but oil's real good from our vantage point, is we basically sat down at a big table of people and said, all right, we're going to take care of this, take care of this. You guys are going to take care of the oil, but we got to keep it in this price range. And,
Yeah.
and so that's all you guys. You bring the oil to the party, and we're going to bring, the bombs and the cherries and stuff like that, and some planes. That's what we're going to bring. And that's just kind of how it is. It's like price fixed. If we ever did become energy dependent, we wouldn't be having this problem. And
Yeah.
I don't know how we didn't learn from the '70s. I mean, before my time, right? That was like when I was born, pretty much. I don't
Oh,
know.
right. Yeah.
I don't know
The
how we did.
lines. Yes.
Yeah, I don't
Yeah.
know. I don't know how we didn't learn from that. Um, let's pivot a little bit here to banks because I'm more interested in that topic. Just
Yeah.
because those charts are all overextended, so I'm interested in what you got to say on that.
Yeah. So I basically like the large bank I follow the most is
BAC.
Bank of America,
Yep.
and I've been kind of caught it under 32 a couple times. Just excellent trades there. Really had been looking for this 40 level, but as I was kind of doing that, I noticed the flow start to really weaken. I first noticed it in Wells Fargo, and then one that I don't really trade a lot that is way the hell overextended is Goldman Sachs,
GS.
GS. So basically, and then I looked at the flow on that, and it's bad. Like it's really bad. It's gonna like under 300 bad. And so I kind of have this idea that there's going to be a pretty significant move down in big banks, that's going to carry over to the DIA, which is the most overextended index fund, and that while everybody's all focused on tech and like looking at what Tesla's doing and like if you're a bear, you're frustrated that Apple's so high or whatever. I think the next leg down in the market is actually going to be banks and industrials, and especially banks. And GS was the one that really stood out to me as this is not going to stay up here very long.
Yeah, I'm with you on the banks being overextended. There's some financial worries out there right now, and they all just had a good run. This thing had four great weeks. You're talking
Yeah.
30% move, pretty much 25% move. Giving that back, totally. Same with Bank of America. I'm with you. That it's 37 right now.
Yeah.
33, 34 probably is more realistic.
Yeah, and it's one of the more like stable ones. I think that it's if it goes under 32, not going to stay there very long. 30 is kind of my sort of the absolute floor on it. If you get under 30, that's probably actually a spot to buy shares, I think. But anyway, yeah. So that's so yeah, I'm bearish on banks, and big banks don't go down in isolation. There's a kind of cascading effect that happens when they struggle. Like tech can run on its own and leave some other stuff behind.
Yeah.
But banks are just so foundational to so many other things that they'll drag some stuff down with it.
I'm over here feverishly circling my 3057 on my Bank of America chart, the only line I have.
Oh, yeah. Nice.
Sorry. Yeah, I don't know why they got so heated, but a lot of the charts are similar, especially if you follow them. You kind of learn, like, not to get back into oil, but I've watched a lot of those more than banks. Like, you kind of learn that BP isn't going to give you more than 10, 11% on the entirety of the move, where
Right.
Dino might move 20, 30%, or Oxy might move 20, 30%. So you kind of got to learn the charts, and
right,
Bank of America is
BP,
that way.
Exactly. Yeah. And if BP makes a really strong move, it's usually to the downside based on
Yes.
Some kind of news. That a lot of Russian exposure was the last big one that took them down. But yeah, so kind of slow grind up with that one.
Bank of
BAC, yeah,
America,
it's
Bank of
always
America is
the
the
one I
same way.
recommend when someone's new to options. BAC is always the one I point to, just because one spot out of the money is like $40, and
Okay, okay.
it's also not gonna just it's not likely to just rug pull on you. So you just learn a lot about how options move, and you're not risking a lot, and you're also playing something that's plausible. I mean, you can buy a $50 contract on Tesla, but you're way the hell out of the money, and it's not going to give you a good approximation of how these things move. So yeah, BAC's is a great one for that.
Why is it that like Bank of America, a stock that moves 1 to 4% in a week, that's a good week for it. Why is
Mhm.
a stock like that cheaper, easier to play than a stock, let's say like Enphase, that has $100 move over the week?
Because the basically like the implied volatility um, is lower, and then like when you enter, right, and so then a move in the stock of 1% um, is gonna give you like a higher IV that's gonna pump the value of the premium a little more. So it's like the smaller moves are more pronounced within the or more stable um, within the premiums, right? So it's um, it's hard to learn on something that is just going to make really crazy moves, because you just get
Well,
caught up in the
explain.
euphoria.
So explain me. So what you're saying is that there's just not as many waves. Like the contracts are pretty stable. Like they trade around 40 cents, 35 cents, right? They're in that pocket.
Yeah, yeah.
Where the other contracts, because of the volatility of the stock, create a bigger range, so they're harder to
Well,
play.
but also the IV is so high that
Yeah,
a
yeah,
like
yeah, yeah.
you can get a Carvana and it can drop, you know, like 8%, and your contracts don't really move that much, because it's like, well, that's just normal for Carvana. Whereas like if you catch BAC, like the best time to catch it, this is the why I play X too, by the way. So like X has this steep drop, and I'm like, okay, this is gonna likely, recover 1.5%. That steep move, like the premiums, and let you get this really good price on it, and then it just sort of eases back up. Whereas you get into Carvana, you need a 6, 8, 12% drop, to get a really decent move in those contracts. So you just, with the stuff that moves more, you need that move, and a flat day just kills you. A flat day
Oh,
on
okay.
BAC is
Doesn't kill
not
you.
is not going to tank the value of those contracts.
So what's the bit? I mean, not to stretch this out too much, but what's the biggest input factor, in your opinion, to um, getting high implied volatility? Is it the stock price moving? Is it the anticipation of news? Like, what really gets the implied
Well,
volatility
I mean,
up so much?
the biggest one is always earnings. So it's like an expected event that we know this is going to move the stock,
Okay.
and so that's one. And then the second one is just the stock's history. So like
Okay.
you call up the average true range. If the average true range is really
Ah.
really high, where the candles on a given time frame are just huge, then that expected volatility is going to be high, and they build that into
Okay.
the contracts and their pricing. So which is why when it has a quiet day and you lose that implied volatility, you use more value in it by the stock just sitting there.
So
And if the IV's already, that doesn't really affect you that much.
so the best possible options play is finding a chart that's flat, because the volatility is going to be low because it hasn't been doing shit on the ATR recently. That's going to have a move. That's the best
Yeah.
option play, correct? Like, because you're going to get it cheaper, and it's
Yes. Exactly. So like right. And that's why Carvana was first time that we did. And it's why like Fubo was so, or AMRS especially, where MRS had been in this kind of steady range for a long time, and we kept saying that when this goes, it's going to go crazy. And if you were, on that, those are the kind of contracts that go 600,000, 800,000%,
Gotcha.
whatever. So yeah, you get that, and that's kind of what we're all about. But the strikes will kind of often tell us stock that's really quiet that is going to move, and that's
Perfect.
what we look for.
All right, let's trying to keep these at 30, but let's pivot a little bit to the next one, which they're kind of hand in hand, bank and crypto in my opinion. Um,
Yeah.
I'm gonna start this one because I don't want to what I say have it to reflect with what you have to say. um, but crypto, in my opinion, um, like just over the last year, it's been people, holding positions that have basically just lost money when they could have gotten out way ahead on huge momentum that probably never coming back. Them Shibs and Dogecoin holders, you're probably never getting that again. Um, but right now, I don't care. You want to call it a crypto winter, a crypto reset. There's such bad news in the water that it's just not the time. And you'll be able to, if you do believe it's a long term thing, you're going to be able to get back on that boat. Um, there'll be a major catalyst. You'll know the time. But again, I think I said a few weeks ago, it's becoming a waste of time. At this point in time, I think on the equity side, we're setting up for some historical lows. It's taking away from that, in my opinion. Um, just see more than a few quarters of negativity over there, especially with the FTX thing. If the government gets involved, it'll be years. It'll be a couple of years because they're slow as hell. So then you're kind of gambling on the administration that's in charge at the current time. So, but on the positive side, I think Bitcoin and Ethereum are probably two that make it no matter what. I just really think you're going to get them cheaper in the long run. Yeah, that's what I got.
Yeah. So this again, if this is how, like, so for me, it's always like I'm stock first into sector. Like I always
Yeah.
have that I anchor onto. Directs me here, and when finally broke down um, below that $47 level, 47.40 was my line, and it didn't really make any attempt to recover that. That was a really bad sign, and it confirmed a lot of the flow I saw into like into the 20s and 30s on it, which I think is very possible, because last Friday coin dropped in the pre-market and just ran back 18% from its lows, and we're just not seeing that. So the coin chart's kind of broken. The flow is bad. So that kind of just gives me some indication. And then I just think that there's so much exposure to this whole crypto contagion, this FTX thing, that is going to just cascade through the whole sector. And Gemini is a big one, and Grayscale, their reaction to it, and this public reassurance that, oh, all our stuff's backed, oh, we're fine, whatever. That usually doesn't last. So yeah, I think we're going to just continue to see kind of waves to the downside. I also think that Bitcoin and Ethereum will make it. The whole, like, the smart contracts are going to be pretty big into the future. I don't think the pictures of monkeys or whatever really matter, but yeah, the blockchain definitely will still be around.
Yeah.
And then, but Bitcoin is just it's designed in the right way to stay around. There's a limited supply of it. It was kind of the first one. But all this talk about cold storage and all that, like, that might be right, but in order for you to get back to those highs, for Bitcoin to go back to 60,000, the general public needs to be able to just pick up an app and just buy the thing whenever they want to. They're not going to learn any kind of programming or put a USB key in a safe or something. Like no one's gonna. Only the hardcore people are gonna do that. So widespread public adoption needs the public to have confidence, and there's no reason for the public to be confident in anything crypto related right now.
Yeah, I don't want to I don't want to be pounding the table or like be the old guy telling you young kids you're foolish, but Bitcoin and Ethereum, and there's probably I don't know all of them. There's probably a couple others that were good that made a lot of people a lot of money. I mean, Bitcoin was cheap at one point in time, so was Ethereum. And
Yeah.
as soon as people seen that, hey, these are making people a lot of money, the market got flooded with it. Not with better ones, not with the next best thing, with copycats and quick fixes. And there's a lot of coins out there. I mean, there's a ton of coins out there, and I'm sorry, but most of them are probably crap. Most of them probably won't be around. And that's what happens when you have something good; it gets copied, and you just kind of got caught up in the not the black market, but you got caught up in the knockoff market of coins. We just did at a time when people had excess money. That's another thing that's not really. These coins took off when the government was sending people checks. When we probably had the highest in history percentage of people from 18 to 30 investing in general.
Right.
Not going out and spending it on the weekend or doing trips because they were locked in their house. Like you're not getting that back, and these coins are just not the euphoria of that. This is going to $1 million is just gone. Um, Even the idea that we're going to use it as like replace cash, it's just not really in the it's just not in the market anymore. Like people aren't talking about that stuff right now. They're literally just talking about which one's legit and which one's not legit. That's the conversation.
Yeah, right. And so if and basically like if you live in a country with hyperinflation and Bitcoin could be a more stable currency for you, but the United States government has no interest in having a competitor currency here in the U.S. So they'll stamp that out pretty quick. I
They'll
think.
make their. I said it. I said that when we were in the hype of the coins, that they'll
Yeah.
just make their own.
Right.
They're not adopting anything. You'll have the Uncle Sam coin.
Yeah.
Yeah. All right. Well, let's do our weekly. I think you nailed Spy, but you didn't nail it till the end of the week. I was winning until the end of the week.
Yeah.
I don't think we got our top end. I had 390 to 410, and or no, was it? Yeah, and then 378 to 412 was the other one.
Yeah.
I had it finishing at 405, and you had it finishing under 400. So I think you won at the end of the week.
Right. And yeah, and I want to talk about that downside number.
Yeah, talk.
So they basically 390, which you nailed that downside, like that ended up holding like really, that was really strong. And the day that it tried to test that, Apple kind of saved the market because Apple made this huge spike, 3%, and I think it was in total like a 4.5% move, which is a huge day for Apple, which just is funds piling in, or plunge protection team, or whatever. But yeah, they were really wanting to keep the market above 390, and so we saw that, and then Friday the pre-market attempt just did not hold up, and I think what was the top end number that got rejected so much?
402.
I think 402. Yeah.
402.
Yeah. So 402. So pretty tight range for SPY overall, and those two levels still definitely kind of stand out to me going into the week.
Yeah, I thought we'd breathe a little more on the top end, which we didn't. Totally called the sideways week. I don't think you can get more sideways than the weekly candle on SPY.
Yeah.
I still like more downside here. If it was 402 last week, I bet we'll close, man, like 391 on the close, and my range will probably be, I think we hit that 80s like 387 and still have a problem at the top end at the 402 403. I don't think we go anywhere for the this week.
Yeah, no, I'm with you, and the to me the historical precedents about Thanksgiving week being bullish or whatever. I think that there isn't much to that. I think it's all about context of where you are kind of in the moment. Volume should be kind of lower this week, and what we just talked about a few minutes ago with Dow stocks and banks, that they can pull back pretty heavily, and that's going to bring SPY down as well. So yeah, so I'm with you. Probably gonna break down through that 390. If it does that, if it gets through that level with some momentum, it could really head into like the low 380s, but I don't think it'll stay there very long. I think it'll probably come back.
Give me your high and low.
All right, so let me zoom out here.
I like that he does TA when he grabs levels. I just look at three weekly candles and say that sounds good.
So I've got and this is kind of just looking at the strikes here. I've got 385.
Okay.
And I'm gonna say 402 again as the top end.
All right, so I'm $4 higher on the bottom end. I like it. I like it. Pretty similar. Yeah, I think we're on the same page there. The thing about if you need a run, like if you need the 410 run, you got to have like a couple things doing good. You can't just have like one thing doing good. And by thing I mean like sector or area or news event. You need the market as a whole to be lifting. We just don't really get a lot of those days.
So what do you make of SPX is, so that S&P 500 is about 500 points off lows, and Tesla is at a 52-week low. What do you make of that?
Well, Tesla is its own thing right now.
Yes. It wasn't always like that. It was much more attached to what was happening in the indices, and it was outpacing them, but it was, when SPY was bullish and recovering, it would do that. You would, like, Tesla wouldn't have a bad day on a SPY flat day, yes, usually.
Yeah,
and
because
the market down.
Yeah, the market at some point in time you've bled out what you could bleed out, right? I mean, this is down 50% on the year. It's hit it pretty hard. Like, the market cap isn't as big now in there, so it's less to take out. Like, the percentage gets smaller, right? Like, if you let's just do it this way: if you had $300 in here, right? Because that's what it was, and now you have $180, right? Like, your percentage, if you lost that again, your percentage would be smaller of what you're losing, like, because you're a smaller piece of the pie now. So yeah, it's because they've already like, the moves that are happening now are just less of a market cap. If their market cap was 100 million at 300, now it's 50 million. So when you take 10% of that out, it's not 30 million anymore. It's only 5 million. So it's a smaller hit to the indice. If that makes, it's the best way to explain it.
Yeah, right. Absolutely. And it really just, it also speaks to why I harp on sectors so much, because if you have been ignoring, like, if you're bullish bias, like, if you're a bear, you've done great lately. But if you look for upside, like I tend to do, I only scalp downside. But if you look for upside and you are not aware of what banks and industrials they're doing, you've pretty much missed the whole reason that SPY has been
Moving.
rallying the
Yeah,
past
yeah,
two
yeah,
times.
yeah.
I mean, because other than Apple, I mean, even Microsoft hasn't been that strong. But it's
T-Mobile.
Boeing, it's CAT, it's
T-Mobile.
Goldman Sachs, and like all those kinds of names. And if you're just sort of if the market for you is tech, it's a confusing time if you're not seeing a bigger picture. So
That's a
so
lot of
yeah, so
people.
that's
A
why
lot of
our
people are grown up that way, that was the future, and they just have that ingrained in their head. Will never let it go.
yeah yeah
Mario. I mean, it cycles. Sometimes you have to buy Cheerios. Sometimes you have to buy microchips. Just how it works.
right
All
yep
right, let's call this good,
all right.
and move on to the TA spot.